Bitcoin under pressure, high ahead of US interest rate decision, and Ethereum jumps over 8%. The cryptocurrency market is on the rise this Wednesday, 19, with Bitcoin trading above $83,000. Among the highlights of the sector, Ethereum recovered an important level by surpassing the $2,000 mark again, registering an impressive appreciation of around 8% in the last 24 hours. This movement reflects not only the renewed confidence of investors, but also the expectation surrounding crucial economic events scheduled for today, especially monetary policy decisions in the United States. The cryptocurrency market as a whole is experiencing a positive correction, driven by a combination of technical and macroeconomic factors. Investors are adjusting their strategies as they await interest rate decisions that can directly influence global capital flows. This is a defining moment for the market, explains Carlos Menezes, senior crypto analyst at XP Investimentos. Investors are looking to protect their portfolios against volatility while monitoring clear signals about the future of interest rates. While Bitcoin is still seen as a digital store of value, experts point out that Ethereum has been gaining traction due to ongoing innovations in its network, such as recent upgrades that have improved its scalability and energy efficiency. ETH has proven resilient and attractive to institutional investors looking to diversify their exposure, adds Ana Clara Santos, blockchain strategist at an international brokerage. Super Wednesday, interest rate decisions in Brazil, the US, and the situation in the European Union. Today is known as Super Wednesday, a day marked by the coincidence of interest rate decisions in different parts of the world. It is a crucial moment for global markets, as major economies announce their monetary policies almost simultaneously. In Brazil, the central bank is expected to raise the Selic rate by another percentage point, bringing it to 14.25% per year. This move aims to contain persistent inflation, which has been pressuring the Brazilian economy in recent months. Meanwhile, in the United States, the Federal Open Market Committee, FOMC, the American equivalent of Brazil's Copom, is expected to keep interest rates unchanged in the range of 4.25% to 4.5% per year. However, beyond these two countries, investors are also keeping an eye on decisions from the European Union, where central banks face similar challenges amid an uncertain global economy. Brazil, the fight against persistent inflation. In Brazil, the decision to raise the Selic rate to 14.25% per year reflects the central bank's attempt to curb inflation, which remains resistant to previous measures. Despite ongoing efforts, recent indicators show that inflation is still above the government's target, raising concerns about the impact of higher interest rates on economic growth. The increase in the Selic rate is necessary to control inflation, but it could harm sensitive sectors of the economy, such as consumption and credit, explains Ana Clara Santos, a financial strategist at a national brokerage firm. Additionally, experts highlight that the Brazilian central bank's decision also takes the international scenario into account. With global economies still recovering from the impact of the pandemic and recent geopolitical crises, Brazil needs to balance its domestic policies with external trends. Any abrupt move could affect exchange rates and further increase costs for businesses and consumers, adds Thiago Costa, chief economist at an asset management firm. United States, Jerome Powell's dilemma. In the United States, the situation is equally complex. Although expectations are that the FOMC will keep interest rates unchanged, the press conference by Jerome Powell, chairman of the Federal Reserve, will be closely watched by investors. Powell faces a classic dilemma. On one hand, there is pressure to lower interest rates to stimulate economic growth. On the other hand, inflation remains above the 2% target, limiting room for easing. Powell needs to signal caution, but he also cannot ignore signs of economic slowdown, says Carlos Menezes, a senior crypto asset analyst at XP Investimentos. If he suggests that rate cuts could occur later this year, however, a more hawkish, strict stance could cause volatility, especially in sensitive sectors like technology and digital assets. The European Central Bank is also in the spotlight. Countries in the region face challenges similar to those in Brazil and the US, but with specific nuances. Inflation in Europe has been driven mainly by rising energy prices, a result of the energy crisis triggered by the war in Ukraine and restrictions on natural gas supply. To address this, the ECB has maintained a strong stance on interest rates in recent months, raising them to historically high levels. However, the current situation is delicate. While some countries, such as Germany and France, show signs of economic recovery, others, like Italy and Spain, still face significant difficulties. Economic fragmentation within the European Union complicates the formulation of a unified monetary policy, explains Rafael Silva, head of research at an international trading platform. The ECB needs to balance the need to control inflation with the risk of stifling the recovery of more fragile economies. Experts point out that any decision by the ECB today could have a direct impact on the euro and European markets. Additionally, Europe's monetary policy also influences Brazil and the US, as the region is an important trading partner and source of international investment. Global impacts and interconnections. The interest rate decisions announced today have profound global implications. In Brazil, the Selic rate hike could attract foreign capital seeking higher yields, but it could also further pressure domestic consumption. In the US, any signal of monetary easing could strengthen financial markets, while a more restrictive stance could cause volatility. In Europe, the ECB must navigate between persistent inflation and the risk of recession, which could determine the pace of the region's economic recovery. These decisions do not happen in isolation, emphasizes Thiago Costa. They are interconnected and reflect the dynamics of an increasingly integrated global economy. For investors, the challenge is to correctly interpret the signals sent by central banks and adjust their strategies accordingly. What to expect now? With so many variables in play, the coming days promise to be decisive for global markets. Investors are paying attention not only to today's decisions but also to the statements from leaders of major economies. For Brazil, the Selic rate hike will continue to be closely monitored, as well as its impact on inflation and economic growth. In the US, Powell's press conference will be key to understanding the future trajectory of interest rates. And in Europe, the ECB will need to find a delicate balance to avoid further crises. In this uncertain scenario, diversification is essential, concludes Ana Clara Santos. Investors should protect their portfolios against volatility while seizing opportunities in resilient markets, such as cryptocurrencies and commodities. Impact on crypto assets. The Fed's decision has a direct impact on the behavior of crypto assets. With high interest rates, investors tend to prioritize safer assets, such as US Treasury bonds. However, if there are clear signs of monetary easing, the appetite for higher-risk assets, such as Bitcoin and Ethereum, could increase significantly. We are seeing a slow but consistent migration of capital to cryptocurrencies, says Rafael Silva, head of research at a crypto trading platform. This is because many investors see Bitcoin as an alternative to digital gold and Ethereum as a gateway to decentralized technologies. In addition, the recovery of Ethereum's price beyond $2,000 is seen as a positive technical indicator. Technical analysts suggest that if ETH maintains this level in the coming days, there may be a new bullish cycle in the short term. It is important to monitor the trading volume, warns Ana Clara Santos. A sustained increase in volume would validate the strength of this recovery. Risks and opportunities. Despite the momentary optimism, experts warn of the risks associated with the macroeconomic scenario. Persistent inflation and signs of economic slowdown in the US remain central concerns. If Powell adopts a more cautious tone during the press conference, this could trigger a correction in the cryptocurrency market, explains Carlos Menezes. Another factor to be observed is the regulatory impact. In recent months, governments and regulatory bodies around the world have intensified their discussions on creating stricter regulations for crypto assets. Any announcement in this sense could generate additional volatility. What to expect now? To follow the developments of these decisions, O Giro do Mercado will be live at 6:30 p.m. to broadcast the decision of the Brazilian Central Bank and offer guidance on how to adjust your investments in this critical phase. This is the ideal time to review your asset allocation and ensure that your portfolio is aligned with your long-term goals, recommends Thiago Costa. Meanwhile, in the global market, all eyes will be on Jerome Powell. His speech could define not only the course of the American economy, but also the behavior of financial markets in the coming months. For crypto assets, the key is to correctly interpret the signals issued by the Fed and adjust strategies accordingly. In the short term, volatility should remain high, concludes Rafael Silva. However, for investors who can navigate the uncertainties, there are good opportunities for gains in sight.